So, welcome, Carrie, Abby, and Samir. I'm excited to talk with the three of you about impact investing and social change today. Before we get into today's topic, can you tell us a little bit more about yourself and how you got to where you are today? And I'll start with you, Carrie. Why did you start the Global Good Fund and the Global Impact Fund?
Thank you, Nazleen, for facilitating and moderating this session. And Samir and Abby, I am so delighted to get to spend time with you today, and welcome to all of our attendees. It's such a pleasure to have this conversation with you. My journey with the Global Good Fund started about 8 years ago. I was working in healthcare at the time, and I had a phenomenal mentor who sponsored me and pulled me up and coached and mentored me, all the things that you would dream a boss would do. And because he invested in me, my leadership accelerated more quickly than it would have had he not taken an interest in my leadership development. And it dawned on me that I was really privileged to have a mentor who cared so much about my personal and professional growth. And it was a privilege that a lot of people who worked just as hard, who had really strong moral compasses, didn't have that privilege. And so my boss at the time and I co-founded the Global Good Fund to identify high potential young leaders around the globe who are using their lives for good through entrepreneurship. And we thought that if we could pair emerging socially impactful leaders with experienced business executives and put some targeted capital behind that pairing, it could be a catalyst for good. So that's the founding of the Global Good Fund. About 5 years ago, VCs started to approach the Global Good Fund, which is a nonprofit organization, asking for access to deal flow. They wanted to talk to people like Samir and Abby, who were fellows who had gone through the fellowship program, and consider investing in their businesses. And what happened was Global Good Fund spends months doing due diligence and then a year in a virtual fellowship program, effectively de-risking the company. And so these VCs loved it because Global Good Fund was de-risking companies, measuring quarterly indicators, and these VCs would come in and invest in the businesses. So VCs were happy, the entrepreneurs were happy because they accessed the capital, and the nonprofit Global Good Fund was sitting there thinking, what's wrong with this situation? The organization's getting nothing here, but was really thrilled that our entrepreneurs were doing so well and having a high conversion rate to traditional VC capital. And so about 5 years ago, we got the idea to start exploring an impact fund and co-founded this impact fund about 4 years ago to specifically invest in socially impactful businesses around the world and domestically. And when we picked our head up 4 years later, 80% of those companies that we invested in are led by people of color and women. And so we've now just begun raising a second impact fund.
Great, thank you, Carrie. I'll ask the same question to Abby and Samir. Please tell us a little bit about yourselves and why you started Isuzu. And I'll start with Abby first.
Thanks a lot, Nazleen, and such a delight to be here today. I grew up in Lagos, Nigeria, humble backgrounds, and had the opportunity to come to the United States for college. And during my experience, having started in politics, Isuzu was really stemmed from a personal experience for me. When my mother and I came to the United States, we didn't have a credit score. So for context for everyone out there, a credit score is essentially a financial identity used to underwrite or evaluate someone's risk potential of paying back a debt obligation. We didn't have that, and we walked into one of the biggest banks to borrow money. We were turned away and had to go borrow money from a predatory lender at over 400% interest rate. In addition to that, my mother sold my father's wedding ring and other jewelry, and that's how we got our start in the United States. So I'm really inspired by this experience, Samir and I started Isuzu on 3 major premises: where you come from, the color of your skin, and above all, your financial identity shouldn't determine where you end up in life.
Thank you, Abby. Samir, please.
Thanks so much, Nazleen, and everyone. Such a pleasure to be here with you today. Like Abby, my name is Samir. I'm the co-founder and co-CEO here at Isuzu. And professionally, I started out working in the public sector. Really quickly realized I wasn't cut out for bureaucracy and kind of gravitated towards startups. Had my first foray, and during that time met Abby about 8 years ago, and we've been good friends, pretty much work husbands since. And in 2015, we started building Isuzu, and in 2017, we quit our jobs to focus on this company full time. But the personal inspiration for me comes from my family's story. My family moved or immigrated to this country from New Delhi, India. And like many immigrants, they were pursuing the American dream. And what I observed was that journey was just so much harder than it should have been. My father was mugged on his first day in the country, and we really had nowhere to go for shelter. And so much of my upbringing was watching my parents work miracles with no money, no credit score, and nowhere to go so that I could have a fighting chance to live my full potential here. And the thought that I was left with was, it just shouldn't be so hard for people that are really trying their best every single day. And so like Abby said, our core ethos here at Isuzu is no matter where you come from, the color of your skin, or your financial identity, it shouldn't determine where you end up in life.
Thank you, Samir, for those introductions, really inspiring personal stories. So moving on with the discussion, again, we're talking about impact investing and social change. So before we dive deeper into the discussion, I'd like to just define impact investing for our audience so that we're all on the same page. According to the Global Impact Investing Network, impact investments are investments made with the intention to generate positive, measurable, social, and environmental impact alongside a financial return. The growing impact investment market provides capital to address the world's most pressing challenges in sectors such as sustainable agriculture, renewable energy, conservation, microfinance, and affordable and accessible basic services, including housing, healthcare, and education. So Carrie, I have a few questions for you. First is, what impact are you trying to make with the Global Impact Fund?
Well, the first goal of the Impact Fund is to make money for our investors. It's a traditional VC fund, and we believe that there's the future of investing includes and will be inclusive across the board of investing in companies that improve our world. And the way to do that is by being successful at making strategic investments that make money for our investors. So that's the number one goal. The way we're doing that is by exclusively investing in companies that improve our world. And when we look at investments, we're looking at companies where if you take the social impact part out of the business, there is no business. The social impact part is built into the DNA of the company. At the time that the Global Impact Fund was started, most people thought you give philanthropically out of one pocket and you invest out of the other. And our goal with this impact fund is to demonstrate that you can invest and make money while doing good for the world.
How has impact investing changed over the past few years?
8 years ago when the Global Good Fund was started, we saw a lot more nonprofits that were social enterprises breaking into the world. And that was the trend 8 years ago. And what we've seen over the last few years are an increase in for-profit companies that can be both profitable and socially impactful. And when we see fellowship programs, incubators, accelerators, impact hubs globally have an increasing trend in for-profit, socially impactful companies, it means that there's more deal flow, more pipeline for impact investors to actually invest in. So I would say the trend here is an increase in social impact businesses to invest in.
And just in light of the pandemic and the racial inequalities that we're seeing here in the United States, are there any major shifts that you're seeing in the impact investing world?
Sure. So specific to the US, 1% of entrepreneurs receive capital who are Black. 3% are women. We need those numbers to go up a lot. The Global Impact Fund 1 had an 80% investment in people of color and women in our portfolio. In the Global Good Fund and the nonprofit domestically, about 52% of the people we invest in are women and 53% are people of color through the nonprofit. And so what we see is when there's access to talent and investment in talent upfront in leadership development, there's access to deal flow, and we have to be looking across the board for that. What we're seeing as a result of the pandemic is that there's a disproportionate share of women-owned businesses and businesses run by people of color that could not access capital as a result of the way our systems work. And so there's a huge problem as a result of this pandemic, with a disproportionate share of companies led by people of color and women shutting down as a result of the pandemic, which really decreases the opportunity for impact investors to make a difference.
And I'll put that on hold. I have some follow-up questions of that when we talk more about diversity in investing, but I wanted to get Abby and Samir into the conversation around the work that they're doing with financial inclusion. So according to the World Bank, there are 1.7 billion people around the world who are excluded from the financial sector. Financial inclusion is what Isuzu focuses on. So my first question is to you, Abby. What impact are you trying to make with Isuzu?
Thanks a lot, Naslin. That number is quite disappointing considering the level of disparity and income inequality we have today. Put simply, what we are trying to do at Isuzu is focus on a subset of individuals in the United States. 76% of Americans have less than $400 in their bank account. And even worse, 70 million people do not have a credit score or a means of being properly underwritten. The average debt in the United States is $135,000. If you do the simple math, multiply both variables, 70 million times 135,000, we can unlock over $9 trillion in the American economy and beyond. That's just not a good thing to do. That's profitable for everyone involved, and it can fundamentally pave a permanent bridge to financial access and inclusion for everyone. So that's what we are focused on, unlocking capital by leveraging the power of financial identity to give people a fighting chance and hopefully reduce the Gini coefficient.
Samir, can you share some of the challenges you have faced in launching your company?
Yeah, thanks, Naslin. The challenges that entrepreneurs face are far too many to name, but to list a few of the key ones we focused. I think the first challenge that Abby and I faced was understanding how to scale our model, because we actually started out building a company that goes directly to consumers to help individuals build credit and increase their savings rate. And what we learned was that method just isn't scalable. The cost of customer acquisition is really high in the financial sector because trust is paramount, and it takes time and resources to build trust. And so the pivot that we made that took some time to understand is becoming a business-to-business company where we now sell to landlords who are able to help us reach a much larger proportion of tenants and ultimately impact significantly more people. Another kind of key challenge we faced was the obvious one, which is fundraising. As you probably everyone knows on this call, most people who raise capital don't look like Abby and I. And I'm not going to lie, that journey was incredibly difficult on our first round of funding in particular. And I think, there's two things there. One is that VCs tend to invest off what they call a mental model, which is things that they've seen be successful before. But if they haven't seen people that look like Abby and I building businesses that look like ours be successful before, it's very hard for them to get comfortable with investing in a business like ours, which is why it's so critical that we have investors like Carrie and the Global Good Fund who are willing to take a bet on kind of paving a new path forward. And in addition to that, I think what was interesting is a lot of the people we were originally pitching to just didn't have proximity to the problems we were trying to solve, right? They didn't understand what it meant to be, a low credit score individual or not have a credit score or be living paycheck to paycheck. And so that also just makes it harder to understand the problem that's being solved. And that's not of their own fault. That's just the reality of, the way that inequality is structured in our society. And I'd say the third challenge that we faced was really the one around kind of thinking through legal and compliance, because we are dealing with extremely sensitive consumer data. There is a lot of conversation around consumer privacy. And so we've really taken strides to be leading in that, and even had to go as far as to qualify for a SOC 2 Type 2 report, which is the data standard held by publicly traded companies. So those were some of the initial challenges we dealt with. I think now our challenges have shifted from problems of scarcity, where we just don't have enough funding, to problems of scale, where we're trying to understand, okay, now we have a larger team. How do we make sure that everyone's on the same beat? How do we find great talent? How do we kind of take what's working and replicate it? So our challenges have evolved over time, but that's what I'd say.
Samir, a follow-up question to what you just shared in terms of the challenges that you faced at the beginning, as both of you being entrepreneurs of color. Can you share an example of how you were able to overcome that obstacle in terms of fundraising and convincing the investors who were so far removed from the problem that this was a natural problem that could be with a profitable motive or margin? I'd love to hear an example of how you did that.
Yeah, it's funny, Nazlin. Abby likes to say an African American saying that if you hang around the barbershop long enough, you're going to get a haircut. And that's literally what it took. We talked to over 200 people. It wasn't about convincing people who didn't want to be convinced. It was really about finding the right people. And so we talked to a number of investors. We had people that kind of got all the way to the final stages of the conversation, but eventually decided not to invest in us because they couldn't get comfortable enough with what we were building. But eventually we found the right investors for our round. So in our first round, we had folks like Acumen Americas, folks like the Global Good Fund, who were very aware of the problems we were trying to solve, understood the issues that we were trying to address, and wanted to make a bet on us. And actually, in this more recent round of funding we've done, we've actually taken the onus to be much more intentional about where we take money. So I'd say 70% of our cap table from this latest round is from investors that are Black-led or female-led funds, and 100% of our investment involved at least one person of color. And that kind of intentionality and ability to find the right people was what made the difference for us.
Great, thank you. That's a really important lesson and best practice for people who are fundraising around difficult issues. So next question for you, Abby. We've talked about challenges. Would love to hear some of your successes, because I think as a company, Isuzu has done phenomenally well. So would love to hear you share some of the successes that you have accomplished so far.
Yeah, thanks a lot, Nazlin. It's been a journey, and we stand on the shoulders of a lot of our investors, our people, and then the village that just continues to propel the mission we're trying to accomplish across board in the United States and beyond. So some of the key things we've been particularly excited about is just from a capital standpoint, investment. I think when we were trying to raise capital from different, investors across board, we talked to over 300 people, didn't have an opportunity to get access to capital then, but with the investments of folks like the Global Good Fund and other investors we have, and we went from over $400,000 in capital in the past 16 months to now over $4 million, which is incredible. Our team has grown from 10 people from last year to now over 30 people and growing. And from a coverage standpoint, when we started this company a couple of years ago, we only had, what we do at Isuzu, I'm not sure we talked about that at length at all, is we work with large multi-family developers and landlords to capture rental data and report it into the credit rating agency to help consumers boost their credit scores. And for those that can pay their rent, through our predictions, offer them microloans. So as a society, we're not solving homelessness backwards. So that bunch of population we serve, we have 35,000 just over a couple months ago, like last year, but now we're inching closer and exceeding 500,000 rental units in the United States. Even during COVID, we've seen an explosive growth, month-over-month growth, quarter-over-quarter growth. But we've always talked about the fact that what we are doing is important, and we're going to see the issues, particularly during a downturn. And that's what we're seeing, because fundamentally, we're dealing with the main causes, not the symptom of a larger disease. So today, 40 states, 500,000 rental units, good funding to propel our growth, and we're just utterly excited about the village that continues to support us.
That's fantastic. Thank you for sharing those successes. Last question is to Samir, and this is about opportunities when you think about the future. Where do you see Isuzu over the next 2 to 5 years?
Yeah, Nazlin, thanks so much for that question. I would say first and foremost, there has never been a better time to be building the business that we're building. right? Because the first few years that we were launching Isuzu, there was friction at every turn, right? People weren't necessarily sure about what we were building, what we were trying to accomplish in the world. But the recent events of this year have laid bare the disparities in our society, where people are incredibly focused on financial access. They're focused on racial equity and racial justice. They're focused on making sure that everyday Americans have a roof over their heads. And those are the issues that we're addressing. And so there's been a shift in the climate from thinking about kind of luxury or kind of higher end products and investments to things that actually help everyday working people. And so we're squarely in that focus, and we have the pedigree in that market. So there's never been a better time to be doing the work that we're doing. I think in terms of specific opportunities, one is we've, I think, found what we call the mythical, product market fit, where something that we're selling is working. We can walk into a room with a real estate investor and get a contract out of it, 9 times out of 10, which shows that we're really finding a market niche that essentially wants what we're offering. And so I think goal number one is taking what we're doing and scaling it across the country. Currently, we're in 40 states with 500,000 units. By next year, we want to be well over 1 million units. We want to be in every state in the United States. And then we want to kind of look into phase 2, which is really, right now we're kind of appending a system that's broken, right? The credit system in America is broken in so many ways, but the reality is no one cares about Isuzu's data or Isuzu score. We need to do something that impacts people today, which is helping them build credit. However, moving forward, we really want to be thinking about how is it that we're evaluating people's trustworthiness in the first place? We have better data than any other source out there in terms of low to moderate income financial consumers, and can better underwrite risk for things like mortgage loans, insurance products, and other kind of key financial tools and resources. And that's really the direction that we want to go into. And then obviously, Abby and I are, our families don't come from the United States. We're obviously thinking about the opportunities beyond just the United States, because income inequality, financial access and inclusion, credit are global problems, not just in the United States. So those are some of the opportunities that we see. It's exciting, but we definitely have a work cut out for us as well.
So I can imagine the time it's Isuzu Global, right? Reaching every country around the world. So audience, watch out for Isuzu. They're coming.
Nazleen, if you want a job on the sales team, it's yours.
I'm telling you.
I'm telling you, Carrie and I have to have a discussion about this. Wonderful. Really, really excited to hear about the opportunities that exist. So we're going to pivot the conversation now to sort of where Carrie left off about diversity and investing. And as you know, part of this conversation is really to talk about the importance of increasing investment in diverse forces to solve social problems. So question first will be to Abby. Can you talk about why diversity matters, both in terms of your clients and your investors? I know you both sort of touched on it a little bit, but maybe we can just dig a little deeper and talk about it more here.
Yeah, diversity matters a lot. I fundamentally believe diversity is equal to profitability. And I'm going to address this topic literally, in 3 steps. Number 1, real life example. I think when we look at the United States and mostly around the world, our capitalist construct has been built under its sinking sand. And a derivative of that is we brought, in the United States 400 years ago, raped, kidnapped, and brought people here, slaves that didn't want to be here, and forced them to participate and used free labor. That's a fundamental construct built under a sinking sand. And fast forward, we think through the discrimination, particularly from a housing standpoint, lack of independent votes to exercise their franchise, and has continued in different forms. But when we look at businesses today, particularly in the 70s, a good example I always try to talk about is Donald Kendall. A good story is Donald Kendall was the CEO of Pepsi. One of an audacious CEO, was one of the first CEOs in corporate America to put a Black person on the board. And what did that lead to? What that led to was the KKK, the Ku Klux Klan, the terrorist organization, white supremacist organization in the United States, came up to him and threatened him and said, this doesn't make sense. You can't do this, right? You know what it did? It doubled down and added more Black people as general managers onto his board. So let's look at how that played out today. Today, Coke who is the fierce competitor of Pepsi. They had a pedigree in the marketplace. Does anyone want to guess their revenue at the end of 2019? Cool. I help out. It was $37 billion. And you have to understand, Coke is still synonymous with, Coca-Cola and a good product from a drinking standpoint. And Pepsi, at the end of 2019, finished the year at $67 billion. That's a classic example. You do it early, you reap the benefits, and that's what you have to include in your model. So when you think about diversity, it isn't just a nice thing to do. It is fundamentally profitable and can move the frontiers of your business forward. So that's number one. Number two is philanthropy, right? When you're thinking about adding people, that's crucial. But when you think about the philanthropy, we need to stop this idea of philanthropy, like Carrie talked about, as one and done. We need to start tapping into the opportunities of impact investing also, where we see that the futures of the people we're trying to lift up, which is fundamentally good for the society we're trying to support, is also profitable. So investing in businesses like Isuzu, investing in other diverse businesses, women-led business, is also a great platform, right, to advance the vision we see in the world, ultimately, that everyone should live a life they've been created to live. And number three is around purchasing, right? Everyone, listening across the board in your companies, we need to move beyond diversity being relegated to, the executive assistants or the vendors making meals for you. Diversity being represented from a purchasing standpoint. Who are your top consultants, right? Who are the ones essentially making sure, advising your pension funds, for example? How are those decisions being made? So for us, the three things we want to really communicate here is diversity is profitable. And if you bake it into people, philanthropy, and purchasing, the sky is fundamentally the beginning of how great your company can become, not the floor.
Thank you, Abby, for those powerful words. Samir, just another question, which is somewhat similar to what I asked Abby, is how can we bring more diverse investors to the table? And what trends have you noticed in this space? I know you already talked about the experience of Isuzu in actually finding those investors. Are there any best practices that you've seen that can bring some of those other diverse voices to the table?
Yeah, Nesleen, thanks so much for asking. I think, Abby did a good job of outlining kind of the overall thought process around why diversity in investing matters. What I would say is our job collectively is to build an ecosystem, right? Like we need each part of this ecosystem of investors, entrepreneurs, and above all, LPs and the people funding the funds to be diverse and inclusive. And so I think a few of the trends that I've noticed are, one, we are seeing that there's a greater recognition that businesses that have diverse founding teams that are solving problems in markets that otherwise weren't thought of as revenue and profit generating opportunities are being recognized as true commercial opportunities. The issue is that it's not happening fast enough. But I'd say gradually we are seeing a trend in that direction. An example that I like to use is a company called Bevel, founded by Tristan Gilliam. And the insight that he had was really simple. Gillette razors actually hurt the skin of people of color, in particular Black American consumers, right? That's obvious. That's like incredibly obvious. But what the industry failed to miss or failed to realize was that the purchasing power of the consumer that was overlooked was incredibly significant, right? And that business got acquired for over $1 billion by Procter & Gamble. He's now incredibly wealthy. And has gone on to do other great things, right? So that's an example of kind of the growing recognition of businesses, but it needs to happen faster because we need to stop, as an investment community, I think we need to start focusing on problems that need to be solved and for a more diverse audience. Beyond that, I think, Abby and I, when we raised this recent round, we had the bargaining power, so to speak, where we had a little bit more momentum with our business to kind of be intentional. I think it's important for founders to be intentional about who they want on their cap table. It's, the urge as a founder is always to kind of take money where you can get it. But I would also say there's some value to being intentional, because the people that join your cap table are the people you're going to be in business with for a long time. So there's benefits to being thoughtful around who are the people that are going to be investing here. There's something that was recently started called the Founders Pledge, right, where founders think critically about bringing on VCs that have at least invested in other businesses led by people of color or women, and or at least have people on their team that are people of color or women. And so I think there's some onus on the founders to be socially responsible. I think another example is how venture funds are constructed, and I think Carrie is a great example of this, where lowering the barrier to entry for investors who are women or people of color by allowing a little bit smaller of a check size. Because the reality is, due to our economic inequalities, people of color and women investors may not have as much capital as your white men in society. And so kind of creating opportunities to let people be a part of something is a win. And I think I've rambled for a little bit, but I'd say the final point is the value of an ecosystem is, when Abby and I win with Isuzu, the communities that we support win. So let's play this out a little bit. Let's say that Abby and I become $1 billion company with Isuzu. We have a great exit, right? Abby and I are going to go back and invest in other entrepreneurs that are solving real problems that we identify with, which will inherently put money in the hands of other diverse investors. At the same time, our employee base is 85% people of color. That means all of them will have a great payout that they can then put into their community, solving the problems that they've witnessed firsthand. Our cap table is predominantly women and people of color. So they get a great return, and they can kind of continue to pay that forward for other in founders and companies led by people of color and women, right? So that's how we kind of create an ecosystem. When we win, the entire ecosystem wins, and that's what we need to create.
Wonderful. Thank you. Thank you, Samir. Everything is so interconnected. Each piece is matters within the system, and any change in the system affects change across the board. I'd love to bring Carrie into the conversation now from an investor perspective. Carrie, could you, I guess, talk a little bit more of where Samir left off in terms of what are some of the most effective ways to bring more diversity to investing?
Sure. Well, I'll say on our first impact fund, we lifted our head up 4 years later, like I shared, and 80% of our investments were in companies led by people of color and women. And I think the reality was we just made the best investments from a business standpoint that we could find. And so it really reiterates what Abby said, that investing in diversity makes sense. It's the best business practice. It was a smart thing to do. What we realized over the summer was that we needed to be more explicit about investing in diversity of all kinds, racial, gender, LGBTQ, people with disabilities. The reality is that while it makes business sense to us, it's something that other people are still getting comfortable with. And for many people, they haven't been invited to participate as investors in impact funds. And so our goal for the impact fund that we're raising now is to have our investor base reflect the diversity of the people we're invested in. And by that, I mean our investors should be people of color, women, people with disabilities, folks in the LGBTQ community. And the way that we do that is, number one, by being intentional and inviting people to participate. I think there is a myth in part that folks don't have capital to invest. I think what I'm seeing is that people haven't been invited to participate. In fact, this was such a strong point for me that we had multiple people who are people of color who couldn't believe that there were so many other people of color invested in our impact fund that we actually hosted a virtual event for folks to meet each other because it was an invitation that hadn't been extended before. And when we could bring people together to invest alongside each other, we could actually build a community of investors who share values, not only in making smart investment decisions, but also in diversifying our investor base. Secondly, to be even more intentional and explicit, we created an opportunity to share the GP with basically to pay for opportunities to reach more diverse investors. And I think it's really natural to ask people to make introductions, and that's fine when it's one or two here and there. But if you're going to line up, dozens of meetings with people of color, women, first-time investors, people reflecting other diverse communities, you should pay for that. That's the right thing to do. And so I'm pleased to be partnering with folks who value the same diversity values that I do and we do. I think the other part that Samir mentioned is when we pitch the Global Impact Fund, we not only describe the business case, we also say, here's why it's socially impactful. This is a fund led by a woman that invests in people of color and women who are leading socially impactful companies. A portion of my percent of the carry in this impact fund goes back to support the Global Good Fund, which in turn invests in a pipeline of diverse entrepreneurs that will be investable for the impact fund. And so across the board, we're investing in diversity. Anyone who invests money here not only gets to invest in smart financial decisions, but also in growing a pipeline of diverse talent, investing in diverse talent, and making money for diverse investors. The way that we're lowering the barrier to entry for first-time investors who are people of color and women are giving people an opportunity to raise their minimum investment level. And by that, I mean for traditional VC investors who are really familiar with how to participate, we say any investment above our minimum allows someone else to participate below the minimum. And that's how we've been able to engage an even broader base of diverse investors who are not only interested in making money, but doing something good for the world.
Thank you, Carrie, for sharing those out-of-the-box ways of bringing more diverse investors into the impact investing space. I realized I had mentioned at the beginning of our conversation that we'd be talking for about 30 minutes. It looks like we are at 40 minutes. I'd like to encourage our audience to please put in any questions in the Q&A that you have for our fantastic panelists here today. I see that we do have a few questions coming in. So if that's okay for the three of you, we'll pivot to questions from the audience, and then we'll just end up with closing remarks from each one of you. So I have a question here from someone in the audience who says that she is a jury and mentor for Impact Tech international competitions. One of the current focuses is to go beyond recognition and build the bridge between innovation and funding. How can we approach this together? Who would like to take that question?
Why don't I jump in here? So in terms of building the bridge between innovation and funding, I think that's what we're trying to do with the Global Good Fund as a nonprofit and the Impact Fund as a for-profit. And I think what I've learned throughout this journey is it takes everyone building that bridge. It's not just impact investors that are solving this problem. It's not just entrepreneurs. It's not just governments. It's not just the nonprofit sector. We all have to work together at this. And so what I'm seeing is that by intentionally supporting philanthropically, socially impactful businesses that are also diverse in a variety of ways, we're creating a platform for visibility, for talent, for investability that otherwise would be less large of a platform. And so we're using a nonprofit vehicle to do that in a way that creates more access to innovation for a broader group of people, where we all know that great ideas are happening all over the world, but there's not inclusivity in terms of being able to put those ideas to action and being able to fund those ideas. And so we're using a nonprofit platform, in our case, the Global Good Fund, to support the leadership development of entrepreneurs, create a platform that creates more access. And then on the for-profit side with the Global Impact Fund, we're able to take equity in some of those companies that come out, as well as other businesses that don't go through the Global Good Fund, to make sure that we can help those businesses scale. So that's one example of, bridging the gap with innovation. And, we'd love to have a conversation with you.
Thanks, Carrie. I have another question that's come in, and I think this is for you again, Carrie. It's from the director of the Hague Humanity Hub. Question is, what are your activities in Europe and what differences are you encountering? And actually, I can ask both Carrie and Samir and Abby as well.
Why don't I let Samir and Abby go first, and then I'm happy to chime in.
Yeah, happy to talk about some of the work we've done in Europe. One of our early investors was, based out of Oslo, Norway, and great experience there, all around, fascinating ecosystem. There's a huge opportunity, particularly looking at the refugee crisis, with people immigrating to Europe, for us to explore a lot of things. But there's definitely an African American saying, you got to build a doghouse before you build the White House. So right now we're focused on the United States, and slowly but surely we're evaluating options to look at Europe amongst our global expansion plan, but it's something we have on our radar, and European investors also have exposure on our cap table.
I'll echo, thank you for the question. Global Good Fund as a nonprofit is we're supporting philanthropically entrepreneurs based in multiple countries throughout Europe. We also, through the Impact Fund, have raised capital from European investors. I'd say from an impact investing standpoint, I actually see the European market being a bit ahead in several ways from the American market. Philanthropically, it's very different culturally, as I'm sure you already know. I think on an individual basis, I see that most, where the culture of philanthropy is built into the mindset and the tax structure in the US. And so we see a really different cultural stance around philanthropy, which is why we make it a point to support philanthropically entrepreneurs throughout the world, including throughout Europe.
And if I can just add on to that, as part of the Global Good Fund, in terms of what we would like to be doing in Europe, we definitely would like to support more social entrepreneurs that are based in Europe. We do a lot around just developing leaders, a lot of young social entrepreneurs with great ideas, but don't necessarily have the right leadership and management skills to get them ready to scale their businesses, similar to just the process that Abby and Samir went through as fellows of the Global Good Fund to get themselves and their companies at a point of scaling. So, we are looking to also grow and dig deeper into different parts of the world. So if you're interested in talking more about this, we'd love to connect offline. It looks like we have a few more questions coming in. We're at about 46 minutes into our webinar. I have a question, again, around responsible investors, and again, talking about ecosystem. What other areas do you feel that responsible investors need to be focused on as we think about economic mobility? The example that we have of Abby and Samir is very much around financial inclusion. Are there other areas of investment that you see as opportunities? And I'll ask each one of you to share your perspective on that.
Yeah, happy to jump in here. Thanks, Nazleen, and thanks for the question. I think from the standpoint of areas for impact investors and ethical investors to think about, I would say that there's no shortage of areas in our societies collectively that are in need of serious structural change, right? So financial access and inclusion is one area, but there's disparities in everything from access to healthcare, right? Access to good quality education, distribution of education. There's access to job opportunities, right? From a talent standpoint, from a mentorship and coaching and leadership standpoint. There's issues around climate change and sustainability, which in fact will impact lower income and minority communities more so anyway. There's issues around maternal health care, especially for women of color. There's a lot of different issues that can be invested in from the standpoint of structural change. And so the lens that I would look at is really for impact investors is obviously you want to have a portfolio that has exposure to different sort of industries and opportunities, but really perhaps thinking through where kind of your superpower or passion lies and the opportunities in front of you, because there's no shortage of areas to drive change in pretty much every sector in society. There's a lot that can be transformed to create a more equitable and just playing field.
Happy to jump in here. 3 areas that I think is quintessential moving forward is we talk about diversity, but in corporate institutions, we mostly relegate the conversation around diversity to chief diversity officer and stuck them with one employee and say, hey, we're diverse. We start investing in diversity technology. We measure our quarterly earnings and say, this is the margins we're making, this is our revenue. It's time for us to put that in our reports, in our annual report, in our quarterly reports, and measure what matters. Measure and disclose the diversity you have in your pension plans, in your boards, across your institutions, and be transparent about it. And then the CEO's pay should be tied to that. So we need technologists facilitating that if we're serious about the profitability and inclusive nature of the future we seek. Number 2 is education. Education played a quintessential role in my life. Without the education my mother afforded me, which, by the way, she sacrificed 60% of her salary to afford me all the great education I have, there's just a huge disparity, particularly about how we think about education around the world. In the United States, it is even more difficult. Your zip code can determine where you end up in life, right? And that's just a shame. That runs afoul from the founding credo of this country. So what we are really bullish on particularly is the power of education. And then number 3 is artificial intelligence. During the age of the internet, the computers, the fast microchip processors, right? A lot of people of color were left behind, and people didn't really understand the ramifications of what automation would do. Now we're having a different evolution whereby jobs are going to be automated. Number 2, particularly with COVID, those timelines are being accelerated. So if we don't invest and create a diverse employee base, capital stack to make sure we're tackling AI in the right way, it's very, very dangerous. So investors should particularly pay attention to those 3 things: diversity, education, and the importance of artificial intelligence and automation.
From my standpoint, in terms of growing economic mobility, one key way to do that is by creating an increased level of solidly paying jobs. And these can be at any level of the economic system. So as an example, both the Global Good Fund and the Global Impact Fund supported a company called the Jackfruit Company, which is a meat substitute product. And for this product, 1,000 farming families now generate 10 to 40% of their annual income through the production of jackfruit, specifically for the Jackfruit Company. Previously, 70% of their jackfruit went to waste. So here's an opportunity through entrepreneurship to convert a wasted good to a good that's producing between 10 and 40% of annual income for farming families. So this is an agricultural example. And my push here would be that it's across a system, everything from AI and sophisticated technology to basic agricultural practices where we can be more inclusive. And these are predominantly, again, it's a really diverse base in terms of racial diversity. In this case, they're producing the jackfruit. And so I share this example because if we want to create more economic mobility, we can create well-paying jobs and well-paying solid income opportunities for people who were otherwise previously excluded from opportunities.
Well, thank you for sharing those perspectives on socioeconomic mobility and how investors can help support just increasing opportunities for all. We are now coming to the conclusion of our session. I found it to be a very robust conversation. a very honest conversation about bringing more diversity and more diverse voices to the table, and just the powerful change that can happen when you do, powerful change socially, economically, and personally, for people who have gone through very difficult times, but have seen opportunities and seen what entrepreneurship and investment can do, and how we can benefit so many people. So in closing, just want to thank our wonderful panelists. Carrie, thank you so much for bringing perspective as an investor, and also from a leadership development perspective. Samir and Abby, as always, I'm in awe of the work that you do, and just always being ready to share your story to a different audience. To our audience, thank you so much for joining us. I hope you learned a little something from across the Atlantic, lessons and opportunities and challenges that we are facing here, but can see that there's a positive and optimistic future for so many of us, as long as we are all in it together. So again, thank you so much. We'd love to connect with you. I think we can do that on the Network Tables platform. Please feel free to reach out to us, and just keep the conversation going. So thank you all so much, and have a great day.
Thank you.
Thanks, everyone. Thank you, Nesline.